BBAI versus VERI. Which AI stock has more growth potential in 2025? BBAI versus VERI, two AI stocks that have captured investor attention as the artificial intelligence boom accelerates into 2025. Both companies operate in the AI sector, but their strategies, clients, and growth trajectories couldn't be more different. One is deeply entrenched in defense and government intelligence. The other thrives in media, enterprise software, and digital automation. The real question is, which of these two has more potential to grow in 2025 and beyond? Let's break down their businesses, financials, catalysts, and risks to uncover which one might outperform as AI continues reshaping industries worldwide. BBAI, BigBear.ai, the defense intelligence powerhouse. BigBear.ai, ticker symbol BBAI, provides AI-powered analytics, predictive modeling, and decision intelligence solutions primarily to defense, national security, and infrastructure clients. The company's bread and butter lies in helping governments and large organizations make real-time, data-driven decisions in complex environments. BBAI's software integrates data from multiple sources, satellites, sensors, and logistics systems, then uses AI models to detect patterns, predict outcomes, and recommend actions. This is particularly valuable in areas like military operations, cybersecurity, and logistics planning. As of 2025, BBAI's client base is heavily weighted toward U.S. defense and intelligence agencies. This has given it a reliable revenue stream, but also exposed it to customer concentration risk. Over 60% of its revenue comes from a handful of large clients, meaning any contract delay or termination could significantly impact results. Financially, BigBear.ai has been showing modest revenue growth. In the first quarter of 2025, it posted a revenue increase of roughly 5% year-over-year. While that's not explosive, it's steady, and its backlog of contracts has grown nearly 30% compared to the previous year, suggesting stable future revenue. The challenge for BBAI lies in profitability. The company's margins remain under pressure because it relies heavily on contract-based projects that involve human labor. To achieve long-term scalability, BBAI is now shifting its focus towards software-centric solutions, recurring revenue models that provide higher margins. If successful, this transition could dramatically improve its valuation multiple. However, there are concerns. Recently, BBAI came under investigation for potential accounting and disclosure issues related to convertible instruments. This has made some investors cautious and added volatility to the stock price. Furthermore, any reduction in U.S. government spending or delay in contract renewals could pose short-term headwinds. Despite these risks, analysts highlight that BBAI's strong positioning within national defense AI could give it a durable moat. As global tensions rise and governments accelerate AI-driven military modernization, demand for BBAI's capabilities could expand rapidly. Veritone, the AI software innovator. Now, let's shift to Veritone, ticker symbol VERI, a company built on a very different foundation. Veritone operates in the enterprise software and SaaS space, providing AI-powered tools for media management, content analysis, compliance, and automation. Its flagship platform, AIware, acts as an AI operating system that allows organizations to integrate, manage, and deploy multiple AI models at scale. Essentially, it's a hub that connects various AI algorithms to analyze text, video, and audio data for insights. Veritone's key industries include media and entertainment, law enforcement, government, and corporate compliance. For example, broadcasters use AIware to automatically tag and search media content. Legal firms use it to analyze hours of audio for evidence, and public safety agencies use it for real-time forensics and voice recognition. Unlike BBAI, Veritone's customer base is much more diversified. It doesn't rely on a single large client or sector, which reduces risk, but also means growth is more dependent on market adoption and product expansion. Financially, VERI's performance has been mixed. The company has faced challenges maintaining consistent revenue growth and continues to operate at a loss. Yet, it has been investing heavily in R&D, expanding AIware's capabilities, and exploring new markets like energy grid optimization and synthetic media generation. Analysts have differing opinions on Veritone's trajectory. Some believe its diversified platform gives it a long-term advantage in the enterprise AI race. Others argue that its path to profitability remains uncertain. However, with increasing corporate demand for AI workflow automation in 2025, Veritone could see accelerating adoption if it can execute effectively. Stock analysis and MarketWatch have given Veri a potential 12-month price target around $9.10, implying notable upside from current levels if revenue momentum picks up. Head-to-head comparison, financials, and valuation. When you compare both companies' numbers side by side, a clearer picture emerges. Revenue growth. BBAI's 5% year-over-year growth might seem small, but its government contracts create predictability. Veri, on the other hand, experiences more volatility but has greater potential for exponential growth if aiWare gains traction across industries. Profitability. Neither company is profitable yet. BBAI's margins are constrained by labor-intensive contracts, while Veri struggles with scaling costs and R&D expenses. However, both are working toward higher-margin recurring revenue models. BBAI through SaaS-like analytics, Veri through subscription AI services. Cash flow. Both companies have negative cash flow, but Veritone's burn rate has been a concern. Investors will want to see progress toward cash flow break-even by late 2025 to maintain confidence. Valuation. BBAI trades on hype and government exposure, while Veri trades more on technology and enterprise growth potential. As of recent data, BBAI's valuation multiples have stretched due to investor enthusiasm for defense AI, whereas Veri's stock remains relatively undervalued compared to peers in the SaaS AI space. Catalysts driving 2025 growth for BBAI. The key catalysts center around government and defense contracts. Any major deal with the Department of Defense or NATO-aligned entities could significantly boost revenue and investor sentiment. Additionally, BBAI's expansion into commercial markets, such as logistics and infrastructure analytics, could diversify its portfolio and reduce dependence on defense spending. Another major catalyst is AI integration in military systems. With global defense budgets increasing, especially in the U.S., AI-driven situational awareness tools like those provided by BBAI will be in high demand. This could set the stage for long-term growth if the company can sustain contract wins and expand its AI suite. For Veri, the catalysts are tied to enterprise adoption. As more companies integrate AI into content management, compliance, and automation workflows, Veritone's aiWare could become a go-to platform. The firm's entry into energy grid management and synthetic voice technology may open new revenue streams. Partnerships will be crucial. Collaborations with large cloud providers or enterprise software firms could accelerate scaling. If Veritone can announce new integrations or contracts with recognizable enterprise clients, investor confidence could surge. Risks and headwinds. BBAI's biggest risk remains concentration. A large portion of its business relies on a few contracts, making it vulnerable if any are delayed or canceled. The accounting investigation also looms over investor sentiment. Additionally, if AI defense funding slows or political priorities shift, revenue growth could stall. For Veri, competition is a major concern. The AI software space is crowded, with giants like Microsoft, Google, and Palantir competing for enterprise AI dominance. Veritone must carve out a unique niche to survive. Another risk is cash management. Continued losses could force the company to raise capital, leading to dilution. Market sentiment can also swing rapidly in the AI sector. If broader tech markets correct or the AI hype cools, both stocks could experience sharp declines regardless of fundamentals. Growth scenarios for 2025. Let's envision two scenarios for each company: a bullish case and a base case. BigBear.ai BBAI. Bullish case. The company wins multiple high-value defense contracts, strengthens its commercial AI division, and transitions to a more software-driven model. Margins expand, revenue accelerates, and investor confidence drives a potential doubling of the stock price. Base case. BBAI maintains steady contract renewals but struggles with profitability. Growth remains in single digits, and the stock trades sideways or with moderate gains. Veritone, Veri, bullish case. aiWare gains significant enterprise traction. New partnerships with media and compliance firms expand the client base, and recurring revenue grows strongly. The company narrows losses and positions itself as a niche AI leader, potentially tripling its valuation. Base case. Revenue grows modestly, but cash burn continues. Investor interest remains limited, and the stock experiences mild upside at best. Both have compelling upside stories, but the risks mirror their rewards. BBAI is the high-volatility defense play. VERI is the slow-burn enterprise SaaS contender. The final comparison: who wins the 2025 AI growth race? Choosing between BBAI and VERI comes down to your investment philosophy. If you favor high-risk, high-reward opportunities, BBAI could be the more appealing choice. Its exposure to government defense contracts positions it in a sector with strong tailwinds, especially as AI-driven defense intelligence becomes a global priority. However, expect volatility and headline-driven moves. If you prefer diversified exposure and steady scalability, VERI offers a broader play on enterprise AI adoption. It doesn't have the same explosive upside potential as BBAI, but it also carries less single-client risk. In simple terms, BBAI equals potential rocket ship if contracts accelerate. VERI equals gradual climber if enterprise adoption scales. Investors will want to monitor a few indicators going forward: new contract announcements or renewals, especially for BBAI. Growth in recurring software revenue for both firms. Improvements in cash flow and gross margins. Analyst forecast revisions after Q2 and Q3 earnings in 2025. Broader AI sector sentiment, as hype and funding trends influence valuations heavily. At this stage, BBAI seems poised for more dramatic short-term movements, while VERI might deliver more stable but slower progress. Both companies embody the promise and uncertainty of the AI revolution: massive potential, but equally significant execution risk. In 2025, the race between government-grade AI and enterprise-grade AI is just heating up, and whether BBAI or VERI leads depends entirely on who executes better in